Alright folks, welcome to a higher time frame drawn liquidity on EURUSD and DXY. Now, this video is basically about where I think the market would go in a longer term basis. Longer term basis are basically the next day, 2 day, 4 days, week, month, etc., etc. Right now, on DXY, as you guys been knowing, I've been bearish for the past this whole quarter. I've been bearish, right? I'll tell you guys the reason. At the start of the quarter, I was bullish, right? Because market's make the high before it makes a low, right? So the when it makes a high, we're obviously long, but we're overall bearish, right? Because we're trying to look for open, high, low, and close, right? Whatever it closes, all we're looking for is that close. Now, real quick, before going any further, make sure you guys like, comment, subscribe, share, join the Telegram, link in the description down below, and let's get straight into this higher time frame drawn liquidity outlook on DXY and EURUSD. So let's get straight into it. As you guys know, in the 3-month time frame, we have 9 days. As you guys know, we care about a time-based concept more than the price-based concept. So time is much more important than price. So we have 9 days of the candle closure, which basically means that the market is going to close and it needs to close at a fair price. The last week of the month, we care about the price closing. So the price doesn't close in the market needs to close at a fair price, right? Like how Thursday and Friday needs to close in a fair price. It needs to cap off the weekly range, right? How in the quarterly time frame, right? The last month and the last week of the month will usually, end off the market. You will basically end off the market's candle closure, so it needs to close in a fair price. So since we have a hammer candle here, right? We have a hammer candle. Now, as you guys know, hammer candle can make the low, right? When there's a hammer candle, it can make the low. It can make a brand new low. If we go back to lower time frame, this specific week was a perfect example. Right? I mean, last week also was a perfect example, right? But this week right over here, midweek reversal, it was a hammer candle because the hammer candle made a new high of the week. Same thing could happen in a higher time frame. Now, on the higher time frame, we opened up, made the high. Now we already made the low, but we were predicting another low to be placed slash a fair price closing to the downside. Since this is a hammer candle, this candle can go down lower. Why? Because it's a hammer candle, right? Now, going on to lower time frame will make it much more easier to understand, right? Much more understandable. On the monthly time frame, we had a monthly CRT to the downside. Today I got souped. We hit that monthly CRT low, but we're still relatively bearish until the next quarter, right? Now, on the monthly time frame, you guys obviously see that a candle cannot close like that, right? Especially for bearish, especially this is going against our bias, right? A candle cannot simply close like that. It needs to close in a fair price, which means it needs to go down lower somewhere around here and close. It needs to close in some sort of a classical expansion candle. You can see monthly time frame usually has mainly expansion candles. You can see some sort of hammer candle here, but this hammer candle went with our direction, so it's perfectly fine. But if it goes against our direction, it's not fine, right? We're looking for fair price closing, but we're like, well, that doesn't make sense, right? Because the market can also close like that. If you have the right bias, market has to close in your direction. You cannot close against you. And this is when you use emotions, right? Which is very important. Now you can see over here we're bearish. So this candle closure like this is perfectly fine. Perfectly fine, right? This is perfectly fine, right? So you can see when we're bearish, we never had a bullish candle, right? We always had a hammer candle or a classical expansion candle. Now, in this case, we need to go up higher to make the high of the quarter. So going up higher definitely does make sense. Now, what else do we have here? We also have on the monthly time frame, we have nothing here except the open, high, low, close. The monthly time frame has 9 days to close, which means it needs to close at a fair price, which means it needs to go down lower, right? So we need to close in some sort of a classical expansion candle. Now, going out to even lower time frame will make it much more understandable. On the lower time frame of weekly CRT downside, we also have, we're the last week of the month. So last week of the month, it usually uses week 3 as a CRT plus 50% mark. But in this case, since the week 3, this is the week 3 candle, since we're going to high time draw on liquidity where the market wants to go, or since we're going with the higher time frame order flow, we don't have to target the 3% mark, right? We don't have to target it. We can target the low. But if you're going against it, like let's say just maybe you're going to be a week 4 reversal that's against higher time draw on liquidity, you must use 50% mark just to okay, so you don't get stopped out, right? So you don't lose too much money, or you don't miss out on money, because market will take the 50% mark in reverse, and we don't want to see that happening, right? Simple as what was a good example? I could go to this one, and this one needs to go to DXY here to show you guys what I mean. Right over here, tap the 50% mark, week 4, the 50% mark, and reverses, right? So without targeting the low, that's why it's very important for us. But since we're going to have John liquidity, it is no problem for us, right? Now, on the weekly time frame, that's all we have. Weekly CRT in the last week of the month, which means it's equal to the fair price. We have a big ass wick that needs to be filled. Now, going on to even lower time frame, what do we have here? We have much more context here. We have a high that broke a low, which is an important key level. We also have a daily range, that has fit a low, stable high, stable low. Premium discount. We're in premium daily range. We're going to sell off. We also have a important key level, which I already talked about. But on its important key level is on daily range, which makes it much more important because we never know when will the market tap the high, that important key level. But we'll never know. The only way we will know is through daily ranges, right? You guys obviously know this, right? Right over here, daily ranges was there. Market, what did the market do? Right? Tapped it, boom, went up higher. Right? Daily range, to the high, to the low, stable high, stable low. This is the important key level. Swoop it out. Boom, boom, boom. Right? So we're looking for the same play here. The market always repeats itself. Same thing as life. Shit happens, right? They constantly happen. We are more familiar than disfamiliar, right? Now, what else do we have here? Also, we also have what about the CRT on a daily time frame? Now, on Friday we never tapped this, this important key level. So I'm looking for some sort of a tap it again. So I'm looking, as you guys know, when this tap this key important key level, I already talked about so many times, but when you tap the key level, right, the important key level, or the premium or the discount, the candle that tapped it needs to close. So it needs to close in a ranging candle. Usually always close in a ranging candle, right? It's just close and generate a CRT, then it will reverse, right? So we're looking for the same thing here. When we tap the important key level, we're looking for it to tap it, range a little bit, close, and looking for it to be used as a CRT, swoop the range high again, and go down lower. Same thing is the same thing always, right? It's going to be a expansion to the key level, right? We're looking for expansion to the key level. We're looking for a range. So after you tap it, we're looking for a range. We're looking for a total swoop, and we're looking for expansion away from the key level. Same thing in a higher time frame. Same thing lower time. That's my entry model and lower time frame. The same exact thing. Expansion to the key level. Either tap the key level, because there could be different type of reactions, right? Now this, I can show you a different type of reaction. This type of reaction right over here was threw up a no ranging candle, right? In this case, when you tap the key level, you range first, then reverse, right? So speed, tap the key level, speed to the key level, range, total swoop, speed away from the key level, right? In this case, you speed to the key level, swoop out the key level, right? Eventually just went away. Now, when you're like, well, how do I know which one will it do? Now, through this aspect in the daily time frame, especially, it's going to be through daily ranges, right? Now, you will know if during daily ranges, when there is a daily range, you'll usually tap it, range, then reverse. You will do that both on the premium and discount, and also the important key level in the daily range, and also it's a start of the premium and discount, right? So when you tap the first time you tap the key level, the premium or discount, you will do that. Now, also, what else do we have here is the key level here, right? And this key level, during this key level, it was on daily ranges, so this type of reaction is perfectly fine. But in a lower time frame, that has to go through your trading style. You have to go through your entry models, right? Are you looking for order block below old lows, fair value gap below old lows or held highs, order block and fair value gap paired? They can cause different type of reactions. double purge, right? The fake double top, fake double bottom, total soups, right? Third drive, all of these cause different type of reaction. A third drive will cause a M shape, right? It will constantly do that, right? So you will expand, range, total soup again, and go down low, right? So expand, range, total soup again. So basically M shape, right? V shape or very luxurious, which on most of you'll most of the time find out M shape rather than V shape, but V shape does happen sometimes, so you do want to be careful on that. V shape does happen, so when you do see it happening, cool. But you want to capitalize on it. You don't want to wait. You do not always want to wait for that M shape. You do not want to always wait for that speed to the key level, range, and speed away from the key level, right? You don't want to always wait for the speed to the key level, range, total soup, and speed away from the key level, right? You do want to look for that in a lower time frame on the 1 minute. If you're having a 15-minute total soup, go to 1 minute time frame and look for that, right? Because 15-minute time frame is not gonna range all the time there, right? It's gonna move away. It needs to move. So in a higher time frame, you can do some sort of V shape. Lower time frame, you're gonna do some sort of M shape, some sort of speed, range, total soup, speed away from the key level, right? That's all it's gonna do. But on the higher time, it may not look like that because it simply cannot range there. It cannot stay there. It needs to move. So that's why. Now, that's my higher control located on dollar. Now, one thing you gotta pitch in the dollar when it does tap it on Monday. Let's hope he does it on Monday, right? When it does tap it, I want to see Monday close, then Tuesday super on Monday high, then go down lower. If Monday doesn't do it, send it to Tuesday. Tuesday tap it, close. Wednesday does a job, right? Now, as you guys know, we trade Wednesdays. Now, go down to EURUSD, same play here, right? Now, on EURUSD, we have a hammer candle, obviously, right? We can close in a hammer candle, and hammer candle can make a high. What I talked about this, right? So we already opened, we made the low. Now we already made the high, but we can make another high and close, right? And then now we're primarily looking for a close. We're looking for a close above. Next 3-month candle needs to come up, close to the high, and go down lower, right? That's all it's doing, right? Now, on the monthly time frame, what else do we have here? On the monthly time frame, we have a candle closure, right? A candle cannot close like this on the monthly time frame, or tell you guys why. Especially if it's going our direction. Now this candle looks like to be a classical candle, so it needs to go up higher and close on a fair price. Also, we already have. How do we know we made the low of the 3-month candle? It's because second month manipulated and made the low, so we know the low is definitely placed in. So we can make another high, potentially then close. Now also on the monthly time frame, we open. Now we already made the low. We can go make the high again or close in a fair price. We have 9 days left till the closing pricing, so it needs to close in a fair price. Then there's a big wick, it needs to be filled and close in a fair price. That means it needs to go up higher. Now in the weekly time frame, we have a little bit more context. We have a weekly, weekly IRL, this auto block, right? Back to ERL, we go up higher. The weekly IRL to ERL is fucking bullshit concept. It's whoever using IRL to ERL concepts is such a bullshit concept. Focus on time and focus on CRT. That right there, that's right over here, costing me losing a lot of money. Right when I focused on the time aspect of the markets, I fucking stopped fucking with. I literally stopped fucking up my bias. Right when I focused on time. Whenever I focus on the IR to ERL, there's so much fucking IR to ERL. There's so much auto blocks, fair value gaps. Which one do you trust? You don't fucking know. So that's why you gotta use time. Time will help you on deciding high probability directions, right? So on a weekly time frame, we need to go to the price, we need to go up higher. We do 4 weeks a month. We have a weekly to the upside with a big weakness to be filled. Now going down to lower time frame, we have you can see on DXY, there was a boss liquidity, right? On EURUSD, there isn't. So on here, so we primarily have to go based on DXY. And keep in mind, we always go based on DXY. DXY is the most important pair because it's the world currency. Now soon it may be fucking the Israeli currencies, it may be the currency of the world. We don't fucking know. But it may be, it may not. But we'll see now, right? God knows best. I don't know. Right? Now you can see when it super out is low, And then as you can see on DXY, and there was no low here, right? There was no sell liquidity. You can see the scan never super any low on EURUSD, but on DXY it's super high. As you guys know, we trust DXY much more than EURUSD. Now, same thing to where was it at? So there was a big ass wick on a dollar time frame. Dollar. There was a big wick. Where'd it go? Where the fuck did the big wick go? Oh my goodness, they changed the big wick. This high right here got taken out, by the way. That high right there got taken out. How the fuck is it not there yet? Wait, is it on EURUSD? Wow. During that Pacific time, this high right over here was taken out. How the fuck did it not get taken out? See? That's why you guys gotta trust DXY during the current, because during this time, DXY super up this high right over here, then went down lower, right? Now on EURUSD and any other period didn't do it. So it may look like some sort of price, fucking manipulation, but when it did that, it was all good because he swept out a daily range, right? Swept out a high, and swept out a low, stable high, right? We made some sort of high all the way over here, right? Then eventually stable low, so market goes up higher, tap the premium, then go down lower. In this case, it doesn't look like it, but during that specific time, it was like that, right? There was a big ass high over here, right? There was a low. Market, you can see this candle went all the way up here, then went down lower, right? Because what it do was it went back to premium, then it went down lower. Somehow on DXY right now wasn't there, because during this time right over here, that big ass wick was there. Oh my goodness. See, chat, you gotta pay attention to the market. You gotta pay attention to DXY. And that right there was market manipulation. So if you look at the quality asset on EURUSD, if you were to buy this shit up, you would have been fucking chopped, right? Until then, until here, right? Why? Because the market makers will fuck you up. That's why you gotta pay attention to the dollar, right? The dollar will tell you the way. EURUSD never told me the way during that time. It was primarily the DXY, because the EURUSD never presented any low or a daily range. Well, this one did on this fucking Monday candle on August 11th. Go check it out. Now, that's what we're looking for. On EURUSD, we don't have it, but with the parameter look at DXY, as you guys know, DXY is much more important than EURUSD. Now, that's all we have here for my weekly time frame. We have weekly open right here also. Now, we also have the next quarter open, which is the next Tuesday, I'm pretty sure. Right, it should be on Tuesday. Or, yep, on Wednesday is a quarter open of the new candle. Now, we'll go from there on forward. Yeah, this is my weekly market recap. Now, weekly market recap. This is my EURUSD and DXY higher time frame draw on liquidity outlook. But make sure you guys like, comment, subscribe, share. Join the Telegram link in the description below, and I'll see you guys later. I hope you guys enjoy this higher time frame, and you guys know we've been killing the drawn liquidity. I've been posting this about for the past 4 months. Go check it out. Fucking killed it. Yeah, thanks for watching, and I'll see you guys later. And hope you guys have a wonderful week. And yeah, let's rush this upcoming week, and I'll see you guys later. Peace out.